Okay, so what you see on the screen now is a sheet that I have developed, and I use it for all my clients whenever they are faced with a scenario like this. So on the sheet, what you have assumed is there is a mortgage of outstanding of $600,000. There is a 25-year term which is yet amortization left, and the different rate options that we talked about previously. What this sheet does, it calculates what the break-even points are if you're choosing a 1 year or a 2 year term, or essentially what the subsequent 2 year or 1 year term would need to be priced at in order for you to come out ahead in terms of interest cost. And likewise, for the variable term, it will calculate as to how many interest rate cuts you would need to see from the Bank of Canada in order for your choice of variable rate to come out ahead of the 3 year rate. So essentially what it does is it looks at the interest rate cost over the period of the term and then works out these numbers. Okay, so let's see. First we will tackle the the fixed rate options. So when I hit calculate, it sort of works out two different things. So for the first one, or the option number one, or 1 year term, it found out that you would lose money if the interest rate on the subsequent 2 year term is more than 4.37 percentage. So essentially your rate would need to drop from 6.84 percentage to 4.37 percentage in the subsequent 2 year term in order for you to be profitable. So you're looking at a drop of about 2.5 percentage to come out ahead. If you go with option number two for a 2 year term, then you would lose money if the interest rate for the subsequent 1 year term or the final third year is greater than 3.03 percentage, or you are essentially looking at a drop of about 3.20 percentage in order for you to come out ahead. Okay. Looking at the variable interest rate option, we know that the prime rate today is 7.20 percentage. And I don't know about your outlook, but I am expecting that you could probably see interest rate come down starting in the 6th month from today. But essentially what this sheet is going to tell you is how many cuts you would need to have in order for that choice to make sense. And it looks at 3 possible scenarios even there. And again, you could have more number of scenarios, but the worksheet looks at 3 scenarios. So the first one being, if the cuts were imminent, meaning the cuts were going to start right today, then how many cuts you would need to see at a minimum over the course of the term in order for that choice to make sense. The second one is, if the cuts were going to start at the end of the 6th month, then how many number of interest rate cuts you would need to see from Bank of Canada for that choice to be suitable. And thirdly, a worst case scenario in terms of if interest rate cuts are delayed, then and they do not materialize till the very end of the term, then how many number of terms or months you would need to sort of see cuts over in order for that choice to still come out ahead. So let's do it and calculate it. Okay, so the first output is for the first scenario wherein I am seeing that the cuts are imminent, then I would need to see 9 cuts or an interest rate drop of 2.25 percentage for my choice of that 7% variable rate to come out ahead. Okay, so that's outcome number one. Let's look at outcome number two. Okay, it's suggesting that there needs to be 11 cuts. So starting the month 6, we would need to see cuts every month for the 11 subsequent months, or in order for that choice to be valid, or we would need to see a interest rate drop of 2.75 percentage over that 1 or 11 month period in order for that choice to be successful. And what is the worst case scenario? So worst case scenario is that you need to see 24 cuts or 6.6% drop in the interest rate for that 7% choice to come out ahead. So the longer that the cuts are delayed, the more it gets tapped up against the choice of going with a variable term. So this is how I would suggest my clients to evaluate the different options that they are faced with and then make a judicious choice. Of course, I don't make the choice for them. They have to make the choice for themselves. But these are certain inputs that they could use to make a better decision for themselves.